friends, welcome to another week. So, if you've been investing over the past few weeks, you will realize that the market has actually been going down. There's been quite a lot of volatility in the market, and I've had quite a lot of people reach out to me saying, I just started investing. These are mostly new investors. My portfolio is down. What do I do? They're really worried. They're like, should I sell and wait, or what should I do? Have I done something wrong? And this video is for me to give a general response as to what is going on and what you should do. So first of all, a news came out recently that the Nasdaq, which is one of the top stock exchanges in the United States, is actually in a bear market. So a bear market just means that the market has dropped over 20% or more. So from 20% or more in the negative means a bear market. And the name bears and bulls come from the way the animals attack. So a bull attacks with its horns going up, whereas a bear strikes down like that. So that's where those names come from. So what is a bear market? 7 things you really need to know about what a bear market is. Number one, it's a 20% or more downturn in the market. And number two, it tends to last about 10 months on average. So it can last much longer than that. It can be shorter as well. But on average, over the past, say, 100 years, the bear markets have tended to last about 10 months, which means there's a potential that this market could last a bit longer. This bear market could last a bit longer for another couple of months, or probably towards the end of the year. Or it could also be shorter. It could be over in a month, depending on how the crisis in the world resolved. And not just the Russian and Ukrainian crisis, but other crises around the world as well. So inflation, supply chain disruptions, and a lot of other things going on. So number 3, this is very, very normal. Bear markets are normal. In fact, this ties into number 4, which is that they occur about every 3.6 years. So about every 3.5 years, we have a bear market. So they're very normal. They're just one of those things that happen. You say, let me give you an illustration. Say, for example, that we had a very hot summer day and temperatures went up to like 50 degrees Celsius. Now, for those of us in some parts of the country, of the world rather, that may not make any sense. Or like Switzerland, you're like, there's no way. But I've actually seen places where the temperature has been like plus 48 when I used to live in Australia. And there are other places that it's been even a bit slightly hotter than that. So imagine you're having a very hot summer season. What tends to happen when the temperature peaks? It rains, right? And the rain comes to cool down the entire temperature. So that's also what happens in the market. When the market has been on a bull run for quite a long time, the bear market comes in to cool things down. So those are the first few things you really need to know about the bear market. Now the next thing is that they can produce some outstanding gains for you. They can really give you some incredible gains. In fact, this ties into the next point, which is that half of the returns of the S&P 500 have actually occurred during bear markets. So if the market drops and you buy, you actually get a far greater return than the person who didn't. So you really need to make sure that you're not ignorant of what a bear market is, and then your ignorance doesn't lead you to selling out your entire portfolio, because it could mean you could miss out on the biggest returns that your portfolio could witness. Now, number 6, you also really need to know that you cannot time them. Or rather, number 7, you cannot time bear markets. They happen all the time. You cannot say when it's going to happen. You cannot say when it's going to end. Nobody knows. We can have indicators in the markets that tell us, what is coming up and, what kind of season we are in. But we don't know for sure how those seasons will last or what's going to happen. So those are the 7 things you really need to know about the bear market. Now, how can you take some practical steps to make sure that you continue to outperform and continue to have a good investment, portfolio and build wealth despite bear markets? The first one is you really need to think long term. Like if you're investing for just a day or a week, then bear markets could potentially wipe you out. But if you're investing for the long term, bear markets are opportunities for you to invest more, because when the market recovers, you have outsized gains, which means you shouldn't panic sell during a bear market because then you actually lose. Now, number two, you really need to avoid speculative trading or speculative investing. During bear markets is not a time for you to be picking on the next uprising stock or the next IP or any of that, or the next trends. That's not what you should do because those trends actually suffer the most. Those speculative stocks are the ones that get, really beaten down during bear markets. You know, now is the time for you to focus on your core portfolio holdings, very good funds, good sectors, good funds. Just hold the entire stock market. For most people, that's often what is best. So just hold the entire stock market and keep buying. Okay. And lastly, number three, you need to make dollar cost averaging your friend. You really need to continue to invest every month as much as you can, because by doing this, you actually reduce your break even point. So, the break even point, often referred to as the BEP, is the average buying price of your entire portfolio. So, let's take, for example, if your break even point for an investment is $50 or 50 francs, any gains above 50 is profit. Anything below 50 takes your portfolio into the negative. So if your portfolio had a break even point of 50 and the stocks rose to, or the fund rose to 100, you've gained $50 on every share that you owned. Now imagine that it drops to 40. Now you are minus 10%, or whatever, minus $10 on your portfolio, which is not really 10%, but you're minus $10 on your portfolio. Now if you buy and you keep buying, and imagine it keeps dropping over time, so $40 and then 35 and then 30. As you keep buying, you reduce your break-even point from 50 to somewhere lower. It can end up maybe like 30, 35 or something, depending on how much you keep investing. So when the market begins to recover, rather than waiting for the market to recover to 50 for you to break even, which is a 0% gain, 0% loss, now anything above your new break-even point, which could be like 35, you start to make money. And when the market recovers to 50, rather than being at zero, you're actually in a profit. And anything, if the market recovers back to 100, you have a greater return than when you're at 50. So you really need to understand this, because that is what really matters and determines your returns in the stock market, your break-even point. So bear markets are opportunities for you to really reduce your break-even point by keeping on investing every month, dollar cost averaging. Keep investing. And when the market begins to recover, you'll be very glad that you kept on investing. So in general, stay away from stocks that don't have much value to them, or funds that don't have much value to them, or speculative investments. Stick with solid funds or ETFs or indices. Stick with very solid things like the entire stock market, or the S&P 500 or the Nasdaq 100, depending on which one you like. Just stick with them and keep on dollar cost averaging. Don't, speculate. Don't panic sell. Think long term, and then you will make really, really good returns. So I just want to encourage you guys, don't panic. Just keep doing what you're doing for the long term, and you would, do very well. Also, let's not forget that around the world right now, people are really suffering, whether it's from, the Ukrainian-Russian crisis, or it is in Yemen or Syria or Lebanon or wherever. People are suffering. So try to, think about that, to see how you can help people. There are lots of opportunities right now to lend a helping hand to people around the world. So maybe even taking your mind off your portfolio for a while to just, be charitable, to give, to help somebody else around the world could also help you as a human, and will help all those other people that we're helping. So, pray for the world, keep people in your thoughts and your prayers, and see how you can help them. Because, yeah, we're going through a tough time, but it affects every one of us. It could affect your portfolio, but the results on others could be more drastic. It could even involve the loss of life. So let's think big picture. Let's not be so tied up in our portfolios that we forget that people are really suffering around the world, and we can find ways to help them. Don't worry. In a few months, hopefully, probably before the end of the year, hopefully the markets will recover, And when the market starts to recover and do very well, I'm sure most of you would be glad that you didn't sell. I am going to be glad I didn't sell because I am just going to keep dollar cost averaging and holding on for the long term. So I'd like to encourage you guys and just thank you for listening and watching. Make sure you share with your friends. If you're on Facebook, join us at Financial Freedom Switzerland Facebook group, and you'll get tips every week on how you can build wealth, protect your wealth, pay off debt and all of that. So thank you very much and have an amazing week. Bye bye.